Hey everyone, it's JJ from MicroEfutures.com. Hope you had a great weekend. I'm a little late with my weekend update video. I was traveling over the weekend and just got back home, so I thought you guys should have it before the Globex Open tonight. I've taken this is just a TPO chart with none of my usual lines and levels and things like that. So I just wanted to show you what I'm looking at. And I have a cost basis here from September. And from that September cost basis, we went up in October and we distributed that cost basis up here. So when you do that, what you do is you take this product and you sell it up here. It's a market, right? That's why we call it the futures market, the stock market. That's why it's not called the futures hot tub, because the object of a market is to distribute inventory at a higher price for profit. Now, when you run out of buyers, like we did here, you put the product back on sale. Now, if it's a really bad sale, we're going to come back and we're going to take out this low here, around 57.25 change. Okay. That low is what I'll be looking for as we go into the election. Okay. What we've done now is we are starting to balance out in this area here, in this sort of 5,800 to 5,740 range. You'll see that we've come right back into that balance range. All right. Now, I'm going to go and put the levels back on here. And don't freak out. There's a lot of them. There we go. Boom. Right. Sometimes it's good to just start with a clean chart. So I did a balance just from the distribution balance. And the bottom target is 57.29 and a half. And we just have not been able to take it out yet. Friday's low was higher, but we took this product from the liquidation, went up and sold it back down. Okay, that's a market. These things are going to happen. I would look for back and forth trading in this range going into Globex tonight and into the week. Now, election, all bets are off, but one thing I would look for is 57.04 is a big level for me, right? If we break that, we're going to come back now. And here's the thing, there's not a lot of trading range in this area from 56.75 all the way down to 55.84. So if we breach 57.04, don't stand in front of a falling knife. And if these levels here, that 56.70 area, that gets taken out, we could come right back into the 5500s, right? And anything can happen on with elections, and they'll probably won't let a lot of us trade because they'll increase margins. But those are levels to the downside to be wary of. All right. Getting back over 5,800, of course, that gives us some sort of indication that the supply is running out, but we still do have weeks of supply above us. So you always want to ask yourself in a market, where are we trading now? And where is the supply? Is the supply above us or is the supply underneath us? So when we were trading here, the supply was underneath us. Now we're back down here, the supply is above us. This is distributed supply. Those are things you want to keep in your mind so you have some sort of situational awareness so you're not going long with unrealistic expectations, right? We always want to manage our expectations when we're trading. Let's go take a look at levels for Sunday. So we closed at 57.59 and a quarter. I'm going to point out the lower stops and name them off. There's the low at 57.52 and change. We have a stop at 57.50. Another stop down here at 57.48. These are the lower stops, 57.40, 39 and change. And I would use that low from 2 days ago, right? I would use it. It's not the overnight low, but down here at 57.34, if you take that out, we'll get a little bit of selling. And I'd be looking for 57.04 and a half on the way down. If now, after a sell-off, generally what we do is we take the inventory, right? The cost basis is here from Friday. The point of control is where 70% of the cost basis is priced. Okay. And what you want to remember is that the value area that market profile people, they talk about the blue stuff. The value area is the cost basis of the entire inventory of the day, 70% of the cost basis. Okay. That's where 70% of the day's inventory is priced. So it's down here. And if we get any kind of buying, we will look for the upper stops, 57.62, 57.65 and three quarters, 57.69 and a half, 57.73, and then 57.77. So those are your upper targets. So generally what we like to do, if it's normal business, we take the liquidated product and go sell it up here during the night, right? So those are your up and down scenarios. Please trade carefully this week. I will be doing more videos this week as your elections progress. We'll keep an eye on things. Remember, we have an election. We also have a Fed meeting. I believe it's on Thursday. So most large players will be risk off into these events. When people who trade huge sums of money are risk off, you should be too. So only A plus setups, size down, trade less, right? Don't be a knucklehead. Okay. If you want to learn how to trade using common sense, no BS, no double talk, we will tell you where to take the trade, where to put your stop, where to put your exit or your target. And we'll also explain why you should be taking these trades. And we'll also teach you when not to trade. All retail traders lose money because they don't know when they should not be trading. And that's very important. You need to know when to do business and when not to do business. And if you don't know the difference, come see us. We'd be happy to show you. I'm JJ. Have a wonderful rest of the weekend. We'll see you this week. Be safe out there. And once again, thank you so much for watching. Bye for now.